We're here to celebrate the opening bell for our ETF, our actively traded ETF, Cambria Global Tactical ETF, GTAA. We want a portfolio to outperform in any market environment. So not just inflationary, deflationary, good economy, bad economy, and if gold's going to 3,000 or 300. So we started the very basic with exposure to mostly equity-like assets. So U.S. equities, but also global focus, foreign equities, but also real assets like real estate, commodities, and then some exposure to bond and fixed income as well. We feel, however, that diversification is no longer enough. That the time when you can just diversify your portfolio, buy and hold, is not risk managed enough. Emotions of greed and fear are really an investor's worst enemy. And so because we have a systematic process, we're moving in and out of these on the weekly time frame based on what the markets are doing. Unless you have the ability to move a lot or all of your portfolio to cash or hedging vehicles, then it's not going to change the performance. It's not going to protect you in a downturn. So we have the ability to move 100% cash and bonds. We've been running separate accounts since early 2007, and our clients started moving to cash in various markets as early as the summer of 07. So as real estate started to decline, and then equities in the beginning of 08, commodities kind of the late summer of 08. So going into the fall, all of those asset classes were in long-term downtrends already, so we were in 100% cash and bonds. We trade over 80 underlying ETFs, so we have exposure in the commodity area to not just precious metals, which we're fully invested in right now, but also base metals, agriculture, energy, and broad commodity indices as well. The nice thing about the portfolio is it treats every asset class independently, and it scales in and out of each one. So we'll trade India independently from how we look at, say, U.S. utilities. We're actually short the U.S. dollar by being long foreign currencies, and we manage that as part of the cash bucket. So that can move based on how much cash we hold, but right now we have about 6% in foreign currencies. We're agnostic at the end of the day to the product we trade, but ETFs are wonderful because they're liquid, they're transparent, they're exchange traded, you have no creditor risk, and so we're big fans of the ETF structure. And in general, as the bigger and bigger players move in, as PIMCO just announced they're doing an active version of their $250 billion fund, price pressure is going to move down, and the ETFs are only going to be better and cheaper as time goes on. We're not making forecasts or predictions of the market because we think that's very difficult at the end of the day, if not impossible, but rather reacting to what markets are doing and hopefully being invested in the markets as they appreciate and moving to the safety of cash as they start to go down.